Okay, Cole. So Colombia is now officially the #1 ally of the United States in Latin America. Last week, President Duque, the president of Colombia, went to the U.S. to meet with Biden. At the meeting, Biden announced that Colombia is in fact the #1 ally of the U.S. in the region, and now they're backing it up with dollars. This year's budget for the U.S. allots $471 million to Colombia to really invest in common interests down here in Colombia in terms of exploration for natural resources, building businesses together, common interests that are really, I think, in a way stemming from what we're seeing on a global basis with supply chain issues, global conflicts. It's an exciting time, I think, for Colombia, but also says a lot about what's going on in the world in general. If you're an investor and you're looking at Latin America as a potential market, you're looking at Colombia as a potential market, why are these kind of events? Why should anybody care?
Sure. I think the main theme, as you just touched on, is supply chain, right? You're going to see a pivot away from certain Eastern economies. So, for instance, Adam and I have written articles about how we see Latin America as the next giant opportunity for the investing world. Largely, we use it as a reference to the China investment opportunity. I think we do have to touch on points like what's happening in Ukraine right now. You're seeing a massive pullback from Russia, and you're seeing global conglomerates exit like everything is on fire. You know, they have to move immediately. So within a matter of about 3 weeks, you have the largest companies in the world completely exiting a market. Now, Russia, for most US-based high net worth individuals, probably isn't on the top of their list to say, hey, I need to get into this market today. But China probably is. How China relates to and enacts some new policy relating to what's happening in Ukraine will largely dictate the US's future foreign policy towards China. The reason to bring China into the mix is really to talk about that decoupling. I think what you're going to see in the future, in our view at Legacy Group, is you're going to see a general decoupling from China. Not a complete decoupling, but enough to make a material macroeconomic impact. So what you're going to see in places like Colombia is you're going to look for the U.S. to start relying on things like petroleum exports, looking at manufacturing facilities being built. There'll be all kinds of industries that would theoretically benefit from a decoupling from China. What you'll see with the United States is they want to remain within supply chain control within allies and national partners which they trust, which they feel are within both their sphere of influence and also within their general ethical bounds to which you're operating on the same page. So I would say the most important thing for foreign investors looking to invest, anywhere outside their home markets is, one, where's a safe place for your capital? Is it going to get nationalized? Is there something crazy going on in the government? And then two, you look at where you can find opportunity. And those supply chain changes that we're seeing from the result of these news will be significant for Latin America, specifically Colombia, here in the next couple of years.
It's really undeniable, right? I mean, we've seen more in the last, call it, year and a half as a result of COVID, supply chain issues, where people are starting to see we can't have this incredible dependence on Eastern governments, Eastern production, Eastern cultures. There has to be more of a connection to, from a US perspective, bringing some of the manufacturing capacity over to Latin America, having less of a distance, frankly, just small logistical things like that of we don't have to move products as far as we would if things were being produced in Colombia. And I think the US is catching on to that. A lot of pressure domestically with respect to inflation, people not being able to get goods and services for their businesses struggling, price increases. Something has to happen. What does it mean for Colombia? If I'm in the US right now and I'm looking at Colombia as a potential opportunity for investment, or I'm in Colombia looking inward at what the country is doing and the benefits and relationships it's building, what does that mean for potentially thinking about putting some money into assets located here?
Sure. I think we should be looking at companies, obviously, that have an export focus. So let's take Polygonus, for example, the company we're filming from today. I mean, most of the clients that they focus on are foreign clients, right? They have US clients, they have UK clients, they have clients in the EU. Companies like that are going to be very, very successful when these supply chain issues occur. And supply chains, by the way, aren't just grain or oil or oranges, for instance. It can be services, right? So if you're a service-based company and say, my servicer, that's say software engineering, is in Moscow right now, you're up a tough river, right? You can't legally transact with that company anymore, most likely, if you're a US enterprise. It can be services industries, it can be agriculture, it can be, processing of milk and pasteurizing of milk. There will be a lot of international companies here in Colombia that stand to benefit. And I would look, if I'm a foreign investor looking to invest in Colombia, look at companies, portfolio placements, largely in the private company space, that will have a focus of bringing their product that's the best in class in Colombia to other parts of the world.
I know your perspective on it, you know mine, but for the US investor who's yet to step outside, call it the comfort zone of US-based assets, public equity markets in the US, or even somebody in Colombia who's looking for opportunities here in their own country, I guess the fundamental question, and one that we get a lot, is it actually worth it? Is there more upside gain potential for me to step into a market that I'm not really familiar with, invest in some place like Colombia, or should I just do what I know, buy some commercial real estate in my US market, put some money into Apple stock? Talk a little bit about the potential upside and why somebody should make that next step.
Sure. I think every one of our high net worth individual investment clients are all asking themselves that exact same question. And the question they're really asking for is, how much is arbitrage worth it? Does it exist? And is the risk reward really worth going after? What I see in the United States right now are, for instance, let's use the commercial real estate example, incredibly low cap rates, incredibly low yields. And these are a lot of those yields that I'm seeing are in development projects. You got high LTVs, the risk of default if a project doesn't go to plan is high, and you have historical lows on those cap rates, which means you're not making a tremendous amount of money. Why is that? There's too much money floating into asset pools like that. And let's say 20 years ago, maybe if you bought it, we're playing in a multifamily development project that was $50 million, maybe there's only a few players. Today, there's millions of players because you can leverage so much. There's so much liquid capital floating around, especially in debt markets. There's a lot of players. So in places like Colombia, arbitrage is higher, and you need to have arbitrage returns to justify risk from going outside of both asset classes and geographies which the investor is not comfortable. I would say there's two examples for high net worth individuals to think about. One example is come down and do what Adam and I do. Let's say you have $1 million to invest in a foreign country. If you want to come manage it yourself, I would say for $1 million placement, even a $5 million placement, it's probably not worth it, right? You
Most
have
likely.
to come in. Most likely. I mean, it takes a long time to learn a market, whether it's Colombia, Mexico, Uzbekistan, or Japan. It doesn't matter. You have to be in country. You have to manage portfolios of your own with diligence, and really got to be there in person every day. So for most guys that invest with us, for instance, they want, a passive investment. They want to be LPs. For LPs, it's really a risk reward ratio. What's let's say the tangible amount of financial return you can see from an investment, and what's the risk weighting? I think what you're going to see, one of the big mismatches we see with our investor base is the ability to see risk and forecast risk. And they might see Colombia is 100 times more risky than investing in Tennessee. Where I would see is, a lot of things with the returns on Tennessee real estate, for instance, I might see as actually being more risky than Colombia because the yields don't justify to me, especially in a development project, how much risk is there really in an inherent project.
Yeah, you're playing on such a small spread.
That's right. That's right. I think the intelligent high net worth individual really needs to take a step back and actively review markets. And once you review 1, 2, 3 emerging markets, you'll become more sophisticated, but really rely on talented management teams. And I would say investment professionals that know the market and really have been there years. And sure, especially in emerging markets, ensure that your operators are there on the ground. I would always recommend operators, the GPs, being on the ground operating in emerging markets. I would never say that someone could run a successful buyout, whether it's a buyout fund, long short fund, whatever kind of fund operation they're running in Colombia. You can't run it from a penthouse in New York City or from an office tower in London. You need to be here on the ground. And those are the guys I would say that our high net worth individuals need to be looking to place capital with.
There's an access to opportunities dynamic that's going on as well. You know, we see big transactions in the market like Activision selling for $75 billion to Microsoft. The ability for the guy you talked about with $1 million to get a piece of that deal, pretty hard to come by. You know, Polygonus, the company we're sitting at, working in the video game space, same potential to build kind of these revolutionary products that people are interested in. That's an accessible opportunity for people if they're willing to step outside of the US market, or even, you know, tap into kind of the LP positions that we're talking about that are out there. Unless you have access to Sequoia funds and
Yes.
and Andreessen Horowitz, and you can participate in what they're doing, it's going to be tough to get in on some of these exciting venture opportunities. Circling back to what we do at Legacy Group, our goal really is to provide these kind of opportunities for folks, as Cole mentioned, be on the ground here in Colombia where we're doing things, where we're keeping an eye on what's going on from a international diplomatic perspective, how the relationship is going between the countries, and really build more and more opportunities for our investors both inside and outside Colombia who are interested in what's going on in the market.